All right, let's dive right into this explainer. Today, we're unpacking a story that seriously sounds like it was ripped straight out of a sci-fi movie, but it's currently colliding head-on with the harsh, unforgiving reality of Wall Street. We're looking at a company called SMX. They've got this wild vision to fundamentally change how we track literally everything, from the plastic in your recycling bin to the gold in your jewelry. But, as you'll see, having world-changing technology doesn't automatically mean you're going to be an overnight financial success.
Here's our roadmap for today. We'll start with the supply chain problem, check out SMX's hidden barcode tech, look at how they actually plan to make money, and finally, dig into their financial reality. Let's get to it.
Section 1. The supply chain problem, and why green desperately needs proof.
Think about it for a second. When you grab a plastic bottle that proudly says 100% recycled material, how do you actually know it's not just cheap, brand new plastic? In today's world, consumers and governments are demanding real accountability. But there's a massive gap between what a brand claims and what they can actually prove. With greenwashing everywhere, proving a product is genuinely sustainable is a huge headache for both brands and regulators.
You've probably heard the term circular economy. It's basically the holy grail of modern manufacturing, reusing materials over and over instead of just tossing them in a landfill. But here's the catch. That whole beautiful system completely falls apart if we can't trust where the materials came from in the first place. If regulators in the EU are demanding proof that your rubber didn't cause deforestation, well, you need a foolproof way to verify that supply chain.
And that brings us to the fatal flaw with how we track things right now. We use barcodes, QR codes, paper certificates, but come on, a sticker can easily get ripped off, right? Paperwork can be forged. SMX takes a totally different approach. They don't slap a sticker on the outside, they put invisible, permanent markers on the inside. You just cannot fake the actual molecules of a product.
Moving on to Section 2, SMX's hidden barcode tech, or as they call it, giving materials memory. So how exactly do you hide a barcode inside a solid piece of plastic or even a gas? Well, back in 2014, SMX took some pretty intense technology originally developed at an Israeli nuclear research center. They licensed it so they could use this high-security tech in everyday civilian supply chains. And over the last few years, they've pivoted hard into tracking things for the circular economy, stuff like recycled plastics, textiles, and ethically mined gold.
The whole thing boils down to a super simple three-step ecosystem. First up, the marker. They mix an invisible, unique chemical soup right into the raw material. Step 2 is the reader, a specialized scanner that reads that chemical soup exactly like a hidden barcode. Finally, step 3, that scan gets locked into an unhackable digital blockchain ledger. Boom, the physical item is permanently tied to a digital receipt.
Now this is an absolute game changer, especially if you're new to how manufacturing works. It's a drop-in solution. That means a massive factory doesn't have to rip out its multi-million-dollar assembly line to use this. They just literally drop the SMX marker into their existing process, like while they're melting plastic and the material is forever marked. It effortlessly survives high heat, melting, chemical processing, the whole shebang.
I really love how their CEO describes this. He says they are giving materials memory. Whether it's cotton from a farm or gold from a mine, this tech gives the material a permanent, verifiable backstory that lasts forever. It's an incredibly powerful concept.
All right, Section 3, how SMX makes money. Let's look at the actual business model.
Because having cool science is great, but you actually have to make money at some point. SMX is going for a highly scalable model based around licensing their 75-plus patents. Think of them kind of like the Intel Inside of physical materials. They don't want to make the plastic, they license the tech to the companies that do. They'll also sell the proprietary scanners, charge software subscriptions for the blockchain access, and rack up fees from big pilot projects.
They're even getting into the crypto space with something called the plastic cycle token. This is fascinating. Basically, since they can prove exactly how much recycled plastic is in something, a recycler can get a digital token for every verified kilogram they produce. They can then sell those tokens to big brands trying to hit their sustainability quotas. It literally turns recycling from a costly chore into a tradable asset.
And to roll this out globally, they aren't going it alone. They lean heavily on joint ventures. Like in Singapore, they set up a subsidiary where SMX owns 70% and local partners handle the rest. They're deploying similar partnership strategies for the global rubber and ethical gold markets.
Okay, Section 4, the financial reality. Time to look under the hood.
Prepare yourself,
Because despite a decade of development, SMX reports exactly $0 in historic commercial revenue. Yep, zero. Their SEC filings show that while they have amazing tech and pilot programs running everywhere, they haven't actually converted those into consistent paying customers yet. In the finance world, they are strictly a pre-revenue company.
And this creates a pretty massive, immediate problem. Developing submolecular tech and blockchain platforms is insanely expensive. As of the end of 2025, they were sitting on $21.7 million in current liabilities. You definitely don't need an accounting degree to see the tension here. The bills are piling up way faster than any cash is coming in.
In fact, their own financial filings include a glaring red flag, a going concern warning. In accounting speak, that means the auditors have serious doubts about the company even surviving the next year without a huge cash injection. They're burning through capital and desperately need external funding or more debt just to keep the lights on.
So if you're an investor, you're looking at some serious execution risk. They recently had to do a crazy 2.285-to-1 reverse stock split, which is basically smashing shares together to artificially bump up the stock price just to avoid getting kicked off the NASDAQ exchange. Add in a $5 million contract dispute, huge dilution risks if they issue more stock, and the fact that their core IP is licensed from the Israeli government, yeah, it's a very precarious position.
Which brings us to our final section, a high-stakes moonshot, the binary bet.
Analysts have called SMX a binary bet, and that really hits the nail on the head. A binary bet means it's either going to zero or it's going to the absolute moon. There is zero middle ground here. The technology is easily disruptive enough to become the gold standard for global anti-counterfeiting, but man, their balance sheet is hanging by a thread.
It's the ultimate standoff. On one side, you have a world-changing technological promise with over 75 patents, backed by massive new government regulations demanding exactly the kind of proof SMX provides. The wind is entirely at their backs. But on the flip side, the reality is pre-revenue status, mounting losses, and a wildly ticking financial clock. They need these big enterprise pilot programs to turn into signed contracts, like yesterday.
So, it leaves us with this final, incredibly high-stakes question. Can SMX turn its brilliant hidden barcode into a profitable reality before the capital completely runs dry? It's an unbelievable race against time, and we'll just have to wait for the next earnings report to see what happens.